Welcome everyone. Welcome everyone to the Tradimo live webinar. Thank you for coming. And before we get going, I would like to check if everybody can hear me okay. And one more notice, if your picture quality is low, you can always tune it up by pressing the cogwheel at the bottom of the video and select HD. Can I get a confirmation that sound is okay? I will be checking it on my other screen as well. Yeah, it sounds okay. So the name of today's guest may be familiar for those who have been with Tradimo from the start. Our presenter, Orlando, has been an active forum contributor and held webinars in the past. Today, however, he is back as the head trader of SNIPE the Trade, a market analysis and signal service that produces an average 500 pips a month and delivers daily signals straight to your mobile, so you won't miss any of his action. He offers a 5-day free trial to Tradimo members. So if you want to receive accurate trade signals, sign up for the free trial via the link below in the description. As well as providing signals for traders, Orlando is also busy as an educator creating a course for Tradimo on stop placement and swing trading, forex and futures. The course will be published in the following weeks, so make sure you check out for the announcement when the course goes live. Or if you're watching the recording, chances are the course already is live. So please check again the description for the link and details where to find the course. And for today's session, the title is Trading Advices for Long-Term Profitability. And as we have a very important rate decision from the Bank of England in just about an hour, Orlando will stay over and cover that live as well. And now, without further delay, it's my pleasure to welcome Orlando Gutierrez to the Tradimo webinar room. Orlando, over to you.
Thank you, Peter. How are you, everybody? So if you can hear me, okay, please type Y on the chat. And without further ado, we're going to start. And well, the name of the webinar is Trading Advices for Long-Term Profitability because, well, I've been doing this for a while, guys. And I'm going to be honest, some, well, beginner traders and intermediate traders focus very well. Their main focus is to create a system, right? And I'm not saying that this is not the way to go. Of course, it's the way to go. You need to learn how to trade before even thinking about making money in this game. But there's also a couple of things that you can tweak, not on your system, but on your actual, well, trading persona for that. I mean, or on your actual trading personality or psychology that are going to make you be more profitable in the long run. So why don't we start with some analysis, some technical analysis on the pound, and then I'm going to incorporate some advices, and then we're going to well, to go through how to position your stop losses. We're going to review a little bit about the importance of risk to reward ratio. Maybe we're going to also talk about correctly positioning your targets. So let's start by looking at the pound dollar. Right here, I don't use many indicators on my chart. The indicator that I have on the bottom of my chart is the tick volume indicator because we are looking at a forex pair and because forex is traded, it's not traded on a centralized market. It's very hard to get the actual orders on well, on currencies. So basically what this indicator gives me is the tick volume of my right, but I mean you get an idea of what's going on basically right here. So I'm going to thicken this chart out, and I'm going to show you what I mean by tick volume. You can see that on the bottom of my chart, we have some vertical lines, red and blue lines. When we have a top blue line, it means that the tick volume on that candle was there was more buyers than sellers on this candle. And right here, you can see that the candle that is forming right now has has a volume or has an imbalance of volume on the sell side, and you can see it right here at the bottom left of my chart, where you can see the sell volume at 760 and the buy volume at 634. So that gives you an idea of what's going on in the market. Remember that price moves because there's an imbalance between buyers and sellers. If there's more buyers than sellers, where price is going to move up, and if there's more sellers than buyers there, then price is going to move down. And well, right now, if you have a short position on the pound dollar, for example, you're going to want an imbalance to the downside. And well, if we get some buyers, or if we get a high volume of buyers, then by just analyzing the volume that is going on right now in the market, you can choose to close your trade or not. But I don't base my decisions um, solely on volume. So let's start by looking at the pound dollar, all right? And let's go to the 4-hour chart. And we're going to, first of all, look at this drop. This is the Brexit drop. And we went from the highs to this low. And I think we dropped a little bit more than 2,000, well, uh, 1,800 pips. And well, then we broke with this level that I pointed out. But I pointed it out because you can see that, let me thicken this chart out. We broke to the upside, and then we tested this level before going on a ride of about 238 pips. And then we broke to the downside, but this was a fake out. And the candles give you a little bit of information of what happened in this level, right? You can see that we have a huge bearish candle, but bears failed to take price down to the next level because this hadn't happened yet. The next level was around these lows. Okay, we didn't test these lows, and what happens is that we found a lot of buyers, and you can see that we tested this level a lot before going down. So I marked this level because this is a very important post-Brexit level for me, at least. That I was waiting for the pound to test again, for the pound dollar to test again. And yesterday, I'm sorry, that's my alarm. And yesterday, I posted a short position that I took around these levels. Let's go back to the hourly. Okay, I took a short position around these levels when we broke with this kind of a head and shoulders formation, and I actually took it, and I actually was happy to take it because one, we rallied for about 468 pips to this important level or key level for me, and we had the Fibonacci expansion. Okay, the way I use Fibonacci expansions is very easy. For example, if I'm looking at a level that I'm thinking about shorting, not only I need a test of this level, not only I need a test of this level, a bearish reaction, but also I'm looking for long targets. Okay, so basically this 213 that confluences with this important level is also a target for bulls that took this currency pair from this bottom. All right, so this gives one, we're going to find sellers, and we are going to find buyers closing their long positions. It really doesn't matter what happens here or who is jumping in or who is closing their trades. The reaction is going to be the same. We're going to have a bearish reaction. Okay, and well, the 61.8 doesn't confluence as much as the 213, but we also have that level. So I was looking closely to taking that short trade because I wanted to ride the pound down, um, and front run interest rate decision. And front running such an important event is a no-no in any trader's book. But because we had this very good short entry, I was able to take a short trade, and take some profit and just wait for the announcement. Okay, the pound dollar rallied as I wished, but I still have 1/3 of my position here, which is breaking even for the time being. But you can see that we are having some imbalance to the downside, so a retest of these broken levels was expected. What is going to happen is that we are going to wait for the interest rate decision announcement, and the market, from what I've read, the market is expecting a rate cut to a 0.25 from a 0.5, which means that the Bank of England is looking to for more easing. Okay, and this means that we are going to have more intervention from the Bank of England, which means that we are going to have more bearish pressure on the pound, which means that the pound dollar is going to go down. If this happens, okay, if you're not in a trade or in a short trade, don't front run this news, because it's going to get very volatile. But basically, this is what's going on with the pound, and this is my plan. And this is the plan that I had from yesterday, and I'm still on that trade. Let's have a look at the yen. The yen, the pound yen. When I trade the yen, I'd like to trade the pound yen because, as you can see, it moves a lot. It has moved around 1,000 pips to the upside, while the US dollar Japanese yen has moved. Let's have a look around. All right, and this is the pound yen. So basically, when I trade the yen, I like to trade it against the pound. But because we have the announcement of the Bank of England, I wouldn't be trading the yen against, or the pound against the yen. If you have any questions, type it on the chat. If you want to go through some analysis, or if you want me to analyze some currency pairs that are on your radar, just type it on the chat, and I'm more than happy to do so. But what I really wanted to do on this webinar is to talk about how you can be more profitable trading trading the system that you are trading right now. And like I said at the start of the webinar, a lot of beginner traders and intermediate traders focus a lot on developing a system, which is fine. Don't get me wrong. It's very hard to develop a winning system, but you can. Most traders overthink how to develop their system, and they get stuck trying to put on more indicators, eliminating indicators, trying to modify their entry rules, their profit-taking rules, etc. And when you do that, you have to retest your entire system, back-tested, forward-tested, go from a demo to a live account, etc. And that takes a lot of time. When in fact, simpler is better. Okay, you can. I don't know about you, but I really don't use indicators on my charts. Like I said before, I use the volume indicator, I also have I use harmonic patterns. Okay, and but we can talk about harmonic patterns on another webinar. We're not going to go through them right now. But as you can see, I really don't use a lot of indicators. I use key levels, and I always look for the reaction to these levels. Okay, because let's face it, no one knows what's going to happen, and the person who tells you that the price of any instrument is going to go up or down is lying to you because no one knows what's going to happen. Okay, it all depends on the imbalance between buyers and sellers, and of course the fundamentals behind the instrument. But what you can do as a trader, I mean, this game is not about knowing where price is going to go, because no one knows. This game is about risk management. And the way you're going to be profitable in the long term is by learning how to manage your risk. Okay, and I'm not only talking about the percentage of the equity that you're going to risk on every trade. I'm talking about the entire parameter, or the entire, or all of the rules that you have to incorporate when you talk about risk. The first one is never risk more than 2% of your account. And really, if you feel that if you don't feel comfortable with an open position overnight, it's because you're trading too large. Okay, and this is not I mean, you're not going to be hitting home runs every week. This is about taking trades and taking small profits. Okay, because just take a look at what happened with the pound, with my pound dollar short trade. I was up about 120 pips on the trade, and if I mean, if I was like wishful thinking that the pound would go lower, I would have erased all of my gains from the trade. And take, I mean, it's very difficult to get a winning position, but it's more difficult to take profits. So you have to learn, one, how much are you going to risk per trade? Two, where are you going to be taking profits? And if you look at my post from yesterday, I told everybody that I was looking to take 2/3 of my trade right here at this level. Okay, because this is a level where buyers could have been found, and they were found, and price moved all the way up. So I took profits on this trade. I still have 1/3 of the trade open, but I am already profitable on it. Okay. All right. So the first thing we're going to talk about is how much of your equity are you going to risk per trade. And most traders think about dollars when they think about risking or entering a trade. This means that, for example, if I had that mindset, I would have said, I'm going to risk $1,000 on this trade, disregarding completely my stop loss placements and my targets and my risk to reward ratio. And when you think like that, and you have a fixed risk to reward ratio that you are aiming to at, you are going to be closing your trades when you get to the profits that you need. For example, if you say that I want to risk $1,000 on the short position, and I want to have a 1-to-2 risk to reward ratio, this means that you're going to calculate your positions. Well, you're going to take the trade disregarding lot sizes, and you are going to close your trade when when the losses hit $1,000, and you are going to close your trade when your profits hits $2,000. And that is horrendous. That is horrible, because stop losses are dictated by price action and by the markets. Okay, you need to understand something. When you take a trade, first of all, I took this short position because, one, we had the bearish reaction to this level, and two, because these lows were broken. Means that not only we hit this level of resistance, but we had the complete reversal to take that short position. Okay, that is the way that I think when I take a position, and that is the way that I think when I take also. I mean, when I look at the setup. For example, right here, my stop loss placement would have been above this level. Okay, and for some people out there, a 130 pip stop loss sounds ridiculous. Okay, why? Because you are used to have a fixed amount of pips as a stop loss. And let's say that I have that is also my mindset, and that I only risk 40 pips per trade or 50 pips per trade. My entry level was around here, okay, when we broke with this low. So let me just, I think I'm going to change, I'm going to use the rectangles. This was my entry level, okay? If my mindset was to only risk 40 pips per trade, I would have been stopped out of my position on a loss just to see price move in my direction, okay? So number one rule or number one advice, always think about stop losses or always think about placing stop losses at a level that invalidates your trade idea. In this case, for example, if price, well, if price fills me on my sell stop right here and then moves up and makes a higher high, this would mean that the reversal is no longer in play because we are making higher highs. Not only that, we are breaking with the previous high, which is this level right here. So this is the level that invalidates my trade idea. Not only that, it gives my trade room to develop and go in my direction. Okay, so never place your stops on a fixed amount of pips or on a fixed amount of. Now, number two, risk to reward ratio. I don't know if I have, no, I don't think I have the Excel sheet right here, but I'm going to explain to you how important this is. Risk to reward ratio can be, taking the correct setups on a correct risk to reward ratio scenario can jumpstart your trading career. For example, if you have a trading system that wins 4 trades out of 10, you might think that that system is a losing system, and just by looking at the win ratio of your strategy, a losing strategy. But you can stop trying to modify or you can stop trying to tweak that system and just look at the setups that you take or the trades that you take. If you take all one-to-one risk to reward ratios, this means that the amount of pips that you are risking pips that you can possibly make out of the trade, then you are going to lose money on the long run. But if you focus only on taking 1 to 2 risk to reward scenarios or higher, then your trading system, that is a losing system that only wins 4 trades out of 10, is going to make money, because out of those 10 trades that you take, the 6 losing trades that you, or the 6 trades that you don't profit from, are going to be overtaken by the trades that you win. We have right here a question: how to increase win rate and risk to reward as well at the same time? Well, the win rate is going to be increased from your system, okay? Because a win rate absolutely on your entry rules, okay, on the setups that you take. But the risk to reward scenario, it's based or is dictated by price. For example, let's go right here, and I'm going to show you what I mean about increasing your risk to reward scenario, your risk to reward scenarios on your trades. Just let me modify the settings on my trend lines. Okay, this is a trade that I took. I was waiting for a break of this level, and not only, this is a continuation pattern, a bearish continuation pattern, and not only I needed a break of this wedge, but also I needed a break of the previous low. So I really took the trade right here. My stops were going to be above the previous high, and my possible return was calculated from the low to the high. So I had a target of around 145 pips. Let me show you where my target was. 145 pips around here. And my risk was on the trade 100 pips. So I had a 1 to 1.4 risk to reward ratio. Okay. So from if I take this exact trade 100 times, okay, and let's say that this setup has a win rate of 50%, which means that out of 100 trades, I'm going to make money on 50 trades. This means that I'm going to get stopped out of my trade 50 times, which means that I'm going to lose 98 pips 50 times, but I'm going to make 140 50 times, which means that that setup, which has a win rate of 50%, is going to make me money in the long run. That's why I'm always going to be taking it. Remember, you don't have to be results oriented. If you are results oriented, you are going to drive yourself crazy, okay? Because you have no control over what the market is going to do. You only have control on the setups that you choose to trade. And this setup it's a profitable setup for me. I don't know if I make any sense, Christoph, or if you understand what I mean on how to increase your win rate and risk to reward ratio scenarios. But basically, the win rate, I mean, you're going to increase your win rate by tweaking your system, but you are going to increase your profitability using your system by choosing only high risk to reward scenarios. Okay. Now, another point that I wanted to talk about is well, closing your trades early. That has such a bad well, hit so badly on your overall profitability that you don't have idea. Let's imagine now. Let's take an example. Let's take this same setup. All right, the same example. Let's say that we take the trade, we get fill on our sell stops, and right here you see that price is moving up, and because price is moving up and didn't hit your your targets or about 30 pips, you get anxious and you decide to close your trades around these levels. Okay, if you close your trades around this level, then what was a 1 to 1.4 risk to reward scenario turns out to be a negative risk to reward scenario. Okay, because now the risk remains the same, about 100 pips, but you only took 60 pips out of it. So by closing your trades early, what you're doing is decreasing your risk to reward on that specific setup. And of course, if that setup has a win rate of 50%, then you are going to lose money by doing this in the long run. Okay, so this is what I'm trying to tell you. Okay, trading is not about knowing where price is going to go. Trading is about thinking on the risk that you are taking versus the reward that you are going to possibly make. Okay, and not only that, it's also um, important to know where your targets are going to be. Now let's take the example right here of this long position on the pound dollar. Let's say that you were looking at this and you were expecting well, you were waiting for the break of this descending resistance. Okay, and this looks like a wedge to me too, well, a triangle, and you were waiting for it. All right, and so you put the your buy stops above these highs for a break of the triangle, and of course a break of this area of previous support, now turned resistance, and the previous highs. Excellent, excellent setup. And because what you want is to squeeze out a home run, you are looking to take the minimum risk that you can. So you put on your buy stops right here, and you put on your stop loss below this low. I mean, in this case, and if you are results oriented, this is going to work because, I mean, we are looking at past price action and it did work. But what if price breaks with let me just change the color and thicken out this trend line. What if price breaks but then decides to test these levels again? Then you are going to be stopped out of a very good long position just to see price go up. Okay, now the correct stop placement on this position is below the previous low or below the triangle. Okay, because this can be a fake out, a retest of the triangle, and then a long position. As I'm telling you, no one knows what's going to happen in the market, but you can increase your win rate by correctly position your stop losses. Okay, if you position your stop losses too tight just because you want a, a bigger position, because let's imagine that I only risk 1% of my equity per trade with a 67 stop loss. I'm going to be able to trade a much bigger position than with a 180 pip stop loss. Okay, but it really doesn't matter, and it doesn't come to this. What really matters is the correct stop loss placement and the level that is going to invalidate my trade idea, because we don't know if this if this breakout is going to continue to our targets. We really don't know if price, or if this was a fake out and price is going to retest the lows again. So you need to understand that stop loss placement is key when it comes to long-term profitability and to increase your win ratio. Okay, because if you trade with the smallest amount of pips that the market is allowing you, then you are going to get stopped out more often than if you correctly correctly position your stop losses. Now let's talk about targets. Okay, this was a great setup, a long setup. Let me just delete these trend lines, and let's say that we don't use Fibonacci expansions or Fibonacci retracement levels at all. Okay, this is basically a naked chart. We are going to use price action and previous levels as our targets. And the reason we do this is because, again, we don't know how price is going to react to the previous level. All right, we don't know if price is going to continue, and of course we can have a perspective on what's going on by looking at the volume when price hits these levels. But really, no one knows if buyers are going to sweep all the sell orders and price is going to continue higher, or if sellers are going to take control of price and start to push price down. And this is another point, and another important point that I need to make. Let's imagine that you took this and you took this trade, and now price hits this area. Because you are getting greedy with your trade, and because you are already up, let's see, 260 pips, you want more out of the market. All right, and because you see how strong this breakout was and how much bullish pressure price has at the moment, and of course the fundamentals behind the move, you decide to not take profit at this key level. Okay, then you are going to end up erasing 180 pips out of your position. Okay, so again, we are not investors. We are not uh, we are not investors. We are not I don't know if you swing trade or not, but we are traders. What we do is we are opportunists, because what we do is we take a position and we exit that position when the next logical level hits. Okay, and in this case, we are looking at this level where we found buyers after the Brexit move. This was a huge move to the upside, and here is where we found buyers. And even after this huge candle, and another thing that you need to know, when you see a big candle right here that goes through a level, it means that all the orders, or in this case the buy orders that were on this level, were swept, which means that this is where true sellers stepped into the market. And even then price moved up. So this is a very key level, a very important level, and this is where profit taking should be done when we're talking about this long position. If you have any more questions, just type it on the chat. And if not, let's change. Let's look at oil, and let's look what's going on with oil, because I mean, oil has given us a little, I mean, two very good opportunities in the last couple of weeks, and this one was yesterday when the crude oil inventories were released in the States. But really, that doesn't matter. Okay, what I want to show you, or what I want you to see, is this. This is a very important level in crude. This is where, after this huge move to the upside, buyers started stepping in, and buyers started to stepping in, and they started to stepping in again. Okay, let's put on the tick volume indicator. Okay, all right, and this is where buyers started to step in, and then they moved price up. And then yesterday, after the release of crude oil inventories, sellers stepped into the market. As you can see here, we have a huge imbalance between buyers and sellers, and a huge imbalance to the sell side. But what happened is that when price hit this level, it didn't go through. So sellers that correctly read the news and stepped in uh, at these levels, they made around 140 ticks, which is awesome in a couple of hours in crude. But if you were thinking uh, like a greedy trader, you would have thought that after such a strong move, and after looking at what happened on the previous strong move, which where when we broke with the previous strong level, then I mean you could have thought that this level would have broken also, or could have broken also, and you could have decided to well, to keep your short position. But because we don't know what's going to happen, and because you got greedy, then you erased 80 ticks on your short position. So important points that we have learned so far, or we have gone through so far: stop loss placement, choosing the correct win to reward, I'm sorry, the correct risk to reward scenario on your trades, and choosing the correct levels to take profit. Because we are traders, and like I said before, if you're trading, for example, I trade the 1 hour chart because I like to trade intraday, intra-week moves. Okay, I'm not. I'm really not trying to trade tops or bottoms and hold my trades through these through these huge corrections. Okay, what I try to do is take a trade and take profit at the next level, take a trade, take profit at the next level, and by doing this, I don't take I don't hit home runs very often, but I am very profitable in the long term, because I only take one to two risk to reward scenarios or higher, and I know where to close my trades. And right here, I'm going to be honest with you. When I saw this when I saw that this level got broken, I really did get a little pissed, because like anyone, I thought that I had left 100 ticks on the table. But really, I mean, you have to follow your rules. You have to, you have to understand what you're doing, and being profitable is not only about having a winning system. You need to know that it all depends on how you manage your risk. So if you have any more questions, we can go through them. If you want to share a chart we can do that too. If you want some analysis on currency pairs or commodities or stock indices, we can do that too. It's up to you guys. If not, I'm going to continue. Maybe let's analyze a couple of currency pairs. Okay, yesterday, well, the US dollar, Canadian dollar, um, hit me hard because well, it didn't hit me hard. This is another example. If you look at the forms, you're going to see that I was writing a long position from this level right here. Okay, my entry was about here. I got filled on my buy limit, and this actually and I was writing a big position that I'm not used to ride, because the level that invalidated my long idea gave me a very tight stop loss. But again, it wasn't me that chose to trade a 60 pip stop loss, which was I'm sorry, a 25, 30 pip stop loss. Was the market that gave me, or price action that gave me the level to trade off of. And so I was writing quite a big position on the US dollar, Canadian dollar, front running the interest rate decision on the Bank of Canada. And again, I took half of my position right here. Why? Because this is the next level, or the next important level. And what happened is that this is where we found sellers, and buyers tried to break through the level again, and they couldn't. And then I got stopped out at break even on the rest of my position after the release of the news. But I managed my trade correctly. I managed my risk correctly. I was able to trade a big position, and I did make a little bit of money on the trade for about 60, 65 pips. Okay, so basically, this is how I look at the markets, and how you need to start to look at the markets. You need to look at the key levels on your charts, and you need to analyze. I have a question right here from Christoph, and again, I can't answer that question. How far can the pound go? 120 or lower? Some people say that we are on the way to equity with the US dollar, but I don't know. I don't know. Fundamentally speaking, it all depends from what's going to happen right now in about 15 minutes with the pound. If we get a rate cut, then yeah, I mean, there's more intervention from the Bank of England, which means that we are going to uh, see the pound depreciate even further. Um, but really, I can't answer that type of questions, and that's the kind of questions that I don't like to answer, because I don't know. I don't know. I really don't know. I mean, I can't answer that. What I can tell you is that let's go back to the pound dollar. What I can tell you is this: if we break with this level right here, let me point it out with my crosshair tool. This is this entire level right here from the 2850 to the extreme lows around the 2790 is what I like to call the bull bear frontier or barrier. If price breaks with this low, then you can expect a move lower. Uh, you can expect a very big move to the downside. But if we break with this level, which is where I put on my stop losses on this short position that I'm still writing, you can expect the pound to go higher against the dollar. Okay, this is how I look at the markets. It all depends on the levels that are going to, or can be broken in the near future. Okay, here I'm going to take a bullish bias, and I'm going to look to buy the pound if we break to the upside, and if we break to the downside, then I'm going to take a bearish bias, a very bearish bias, and I'm only going to look to sell the pound against the dollar. Okay, the time being, this is a very, very nice range that we are trading in, which is a huge range, 450 pips, which can have some trading opportunities inside of. But I really think that if we remain inside of this range, then well, my bias is going to be very neutral on the pound versus the dollar, and to really have a true bias on it, I need to break. Well, price needs to break either to the upside to get very bullish on it, or to the downside to get extremely bearish on it. But how far the pound can go, I really don't know. I mean, I can't answer that. So, but let's take a look at the monthly on the pound dollar. I mean, my chart goes to 1994, and we don't even have levels that uh, this low. So I can't even point out levels that I could be targeting if the pound breaks with my bear barrier or my bear frontier, which is this golden rectangle right here. And how many time how much minutes we have until the announcement? About 12 minutes until the Bank of England announces its decision to maintain or cut or hike the rate. A hike is very unlikely. I think that the decision is between maintaining it at 0.5% or cutting it to 0.25%. And we're going to see a lot of volatility. And right now, well, right now we are seeing some volume in the market. And let's go to the 15-minute chart and let's see what has happened. Right here, well, this is untradeable. This is untradeable price action to me, at least. And if you really, actually, I'm not going to do that because that would be trading advice, and uh, I really can't do that. But I mean, you can see that this well, price has tested the broken levels, and it has. I mean, it has been very choppy price action. This to me looks like very indecisive price action. And if you're not on a trade right now on the pound dollar, I advised against jumping in on either side because that would be front running the news, which is terribly bad um, trading plan. But I don't know. I mean, technically speaking, we're inside of a triangle, but this is just a noise pre high impact event. And this is what we're going to be looking at when we get the announcement. Let me see if I have my Squawk service on so we can see, we can hear uh, the actual numbers when they come in. Are you guys on any trades right now that you maybe want to discuss on this webinar? Cool, actually. If you are trading any currency pair, entry level, stop loss level, and take profit level, and we can analyze it, or I can analyze it the way that I look at the markets. I'm not going to tell you what you do is right or wrong, but I could tell you what would I have I done, would I been in your place at the time you took the trade. So if you are in a trade, just share it, share the currency pair or the instrument, the entry price, stop loss level, and targets. All right. Now, what else can we go through? That can you hear that? Can you hear the squawk? Just type yes if you can hear the squawk. The Reuters consensus looks for all 9 to vote for a cut on the pound. I'm sorry, on the interest rate. Okay, if you couldn't hear my squawk, that's what they were announcing. Folks really don't know what to expect, but Reuters expects that all nine vote for a interest rate cut to 0.25%, which is going to move price on this instrument down a lot. I think that well, this is the first level where if that happens, really, if we get a rate cut out of the Bank of England, this is the first level that we have to look at. Okay, let me just put. I'm going to use the same rectangle that I was using right here. Okay, so this is the first level that we might get some profit taking from shorts and some buyers stepping in, and I really don't know. I really don't know who is going to be buying the pound against the dollar after a rate cut out of the Bank of England. But really, I mean, this is the first level that I will be looking at, and then the final level right here. Now, if this level breaks and this level breaks, then I really don't know which levels can buyers step in, and if these levels break, I expect um, a huge bearish move. All right, so what we're going to do right now, I'm going to, well, if you don't want to share trades with us, it's fine. Um, we're just going to wait for that announcement. We have been live for how long? Let me see, 52 minutes. That, and what we're going to do is we're going to wait for that announcement. If you have a trade that you are writing right now, and you want me to look at it and tell you what would have I done on your place, just share the instrument, the entry level, well, the entry level, stop loss level, and of course the target level, and we can go through it. If not, let's wait for this announcement. It comes in 6 minutes, and I'm going to be right back. Just give me 2 minutes, guys. I'm going to I have to set up some levels on my real account, and I will be back in 2 minutes. Okay, guys, I'm back. We are T minus 4 minutes, and there is nothing going on. Well, we do have some imbalance to the downside, more sellers than buyers right now, but I mean, this can change in seconds, guys. Now, if you don't have a Squawk service, you can go to financialjuice.com, which has a free live service. Right here, I'm going to share with you the site. I'm sorry, the link. Message not sent. Remove any web addresses. I'm sorry, I can't. But just go to Financial Juice and click on Voice Quack, and you are going to be able to get the numbers the second they are released. All right, so let's 2 minutes. 2 minutes. In 1 minute, we're going to get the numbers, the previous numbers, and the expectations. And in the meantime, I'm going to tell you a little bit about what SNIPE the Trade is. Well, in SNIPE the Trade, we take we have two services. We have a signal service, and actually the market. And this is an announcement that I was going to make. I was going to make later this week, but I'm going to make it right now. From Monday, we are going to have a free live trade room that is going to run every single day for about 2 hours, previous to 1 minute, guys, 1 minute, for about 2 hours around this time of the day, about 2 hours before the New York Open. We're going to review what has happened during the London session. We are going um, check the trades that we have check out. We have some buyers coming in. We are going to review the trades that we have sent out in our signal service, and we are going to well, if you want to share your charts, and if you want us to review the charts, we can do that too. Hold on, here we go. Oh no, there is no cut. No cut. I think there is no cut. Just the release hasn't come out yet. 10 seconds, and the pound has jumped 200 pips already. Unchanged, 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 unchanged. So there you go. They yeah, wow, that's right. The interest rate was unchanged by the Bank of England, and we have a surge in buyers right here, and the pound moved up. Of course, it stopped me out on the last part of my trade, but that's fine. I still made money on it, and um, basically that is why you don't front run the news for such high impact events. Okay, guys. So um, be running a free live trade room for analysis charts. And if you want to profit like we do from the market, you're welcome to subscribe to our signal services. And on the description of this webinar, you're going to find a link to do so. It was awesome to be here with you guys, and I'm going to see you next time. I'm going to try to do these kind of webinars at least 2 times a month or so. And thank you for joining us. And if you have any questions, just post your comments or your questions on the forums. So Sebastian went short at 131. Holy moly! So you went short right here at 131. 134.1. Yeah, that's right. That's a nice trade, man. That's a nice trade. And check this out, guys. Check this out. We hit this level right here. Okay, to the pip, and now price is coming down. Okay, so profit taking level, sellers jumping in like you, Sebastian. No, no, what? 134.1. You went short what? 134.1 right here. But I mean, you can see that just by looking at the levels, uh, well, not just by looking at the levels, but important levels work in the market, and uh, those are the levels that you need to be using for your profit taking, and of course for your stop losses. So, guys, I'm going to see you next time, and thank you for joining us. And if you want to join our services or signal services, click on the link description of this webinar. See you.
Thank you, Orlando, for the great session. I hope everyone enjoyed the webinar and
Okay.
coverage of the um, Bank of England rate decision. It's not the outcome that most expected, and the move that followed is really crazy. I hope it will all
Yeah.
go well for Sebastian. And again, if you like the
Yeah.
trading style and the ideas shown in this webinar, please check out the description as Orlando already told you. You'll find a link to the analysis service, trade signal service. And if you're watching this webinar as a recording a few weeks after the streaming, there's a fair amount of chance that the course is live already. So just jump below the video to check for the link and more details. So thank you again for coming. For the next session, please watch out for our announcements or subscribe to our YouTube channel, and you will automatically get a notification about the next event. Thank you very much again, and see you next time. Bye-bye.